Welcome to Markets Now. I'm Michelle Rook with Dwayne Bussey at Bolt Marketing, and we're seeing a lot of red on the board here this morning, again in grain and livestock futures, just a few exceptions. But Dwayne, let's talk about the grain trade because we've been scoring new contract lows in the corn market for the last several days. You've got soybeans below some pretty key moving averages. Let's talk about where's the pressure coming from? Is this just a lack of a weather story?
I think there's several sellers in the market this week, and when you got a lot of sellers and very few buyers, it makes for a hard crash like we've seen. I think one, the funds are out there selling rather aggressively. They're probably short another 100,000 contracts larger than the 200,000 we think they are now. And then, but I also think you got farmers selling in here actually, which is kind of stinks at these lows. But I've been getting phone calls from people who aren't even clients, kind of asking like, what do I do with my old crop corn? And you can just hear in their voice right away they're frustrated with this market, and we all thought it was going to rally because the USDA numbers are bullish, the stocks use ratio is bullish. So but I think when you got to this July contract expiration, I think they had to decide whether they're going to roll or sell, and I think farmers have been selling as well.
Okay, so we have first notice day coming up on Monday in July corn, and so the producers have to be out or they have to roll. Is that right? And so that's where we're getting that farmer selling pressure.
Yeah, and to roll, a lot of them are faced with a 5 cent charge, or it's going to cost them 5 cents because the September board is below July. So I think they're feeling like they're getting kicked when the market's down. Kind of a well, oh, fine, and this is what I would call panic selling, Michelle, or just give up. And it stinks because it's at the lows. But to your point too, with the weather forecast, you go out the extended to 14 days, and you were just not seeing this hot, dry forecast that was talked about all winter long. So I don't blame guys for giving up. I mean, I'm going to try to hold my old crop corn and not make any new crop sales here because even if the acres are right and the yield's high, I don't know how much further we really have to go down. I don't think there's any weather premium, and I think demand is good at these prices, Michelle.
Yeah, I was going to say, where do we find support now? What are you looking at?
Well, I'm glad you actually asked that because, of course, we're making contract lows this week in like September corn, D's corn. So then when you make contract lows, you have to go out to like continuous charts, further back to find support. And December corn kind of looks to me like it wants to test that 410 area. And then, of course, $4 is a psychological number. So we're talking 14 cents lower here, maybe 24 cents most. But Michelle, I really don't think we have to go down that low. But if there's no buyers and we have two groups of sellers, like I've mentioned, the markets can just fall down there. The only good thing I'll say is if we go down to $4 and sit there for a month or two in low US dollar, I think export demand will stay strong and we'll compete even for feed usage. So, as farmers, we always want high prices, but it's not how supply and demand works. If we have low prices here for a while this year in 25, maybe we have higher prices that come fall.
Let me ask you about that as far as a follow-up then. You think $4 corn, did we have to get that low because of Brazil's record safrinha crop on corn and because Argentina's corn prices are so much lower?
Right. Those are two very key factors as well. Yeah, Brazil's crop size, we've had some new estimates come out. I think CONAB comes out here soon, and it's just a monster crop. I had it pegged for about 10 million metric ton over last year, which is a lot of corn. Some people now are talking 20 million metric ton over last year's crop size. That's very bearish for the global markets. But remember, our world corn supply was actually fairly tight going into this year. So, I mean, that's a bearish number, but not horrible. Now, China usually buys a lot of corn from Brazil, or at least they have recently. They haven't even bought 1 million metric tons so far this year. And last year they bought 10 million metric tons. So I think there's some demand that's still been sitting out there. And obviously corn's kind of for sale. I would think China would step up here soon. And you mentioned Argentina. You're right. They're kind of a fire sale right now. They've got a decent crop size too. And their farmer selling is about double what it was last year at this time. The only good thing about that is hopefully they run out fairly soon and they have to come back to look to the U.S.
Yeah. All right. So the soybean market, like we said, lack of a weather story is part of the problem. We also have soybean meal, which is scoring new contract lows. And so how much lower do you think the soybean market's going to go here, especially because we took out a big key moving averages yesterday, the 100 and the 200 day now?
Well, it's funny. My answer to that question has kind of changed just since yesterday morning. I thought we had a nice bullish upward trend line drawn in some of these charts, the August chart, the November chart. And that was from the RVO news. I thought, here we go. The soybean market is actually fairly tight. I haven't heard any of the agreements that we made with China in the trade war that we did have, but the trade war is kind of swept under the rug for now. So I'm not worried about export demand being down 600 million bushels like it was the first trade war. All that good news, and we just broke yesterday. We broke through those moving day averages you talked about. When I'm drawing some lines now on the chart, I'm kind of looking at maybe we got to go down to $10 on November bean. So that's another 18-20 cents lower than we are this morning before we find support. And like you said, with weather and Argentina being cheap, I don't have that bullish story to reverse this trend.
Yeah, and we are actually below price levels where we were when we got that RVO news, aren't we?
Right. I know. We finally get good news and then we wipe it all away again. The funds
Yeah.
are aggressive sellers right now.
Yeah, and they were long in the soybean market, so they've got some room that they could go short, right?
Yep, you're exactly right. They were long, so they can get out of those long positions. Feels like that's what's happening here. And remember, it is the end of the quarter, big report on Monday too. So there's a lot of position squaring going. I know nobody likes it when I talk about all this position squaring, but that's just a big part of markets too. Now, when it comes to the corn side of things, squaring up positions should be buying interest. They should come in because everyone's short and they're short a lot of corn.
Yeah. All right. I want to get into the reports, but let's get into the wheat market just briefly here. Wheat market has fallen with corn and soybeans, even though we have had harvest delays here, right?
Yeah, we had massive harvest delays in a tough harvest. It sounds like in Oklahoma, it's just ruts left and right. But of course, up here in the Dakotas, we've seen that before too. It stinks for the producer. It's frustrating, but when they are getting through those fields, it is very good yields. And I think that's the pressure you're seeing on our wheat prices here. Also globally too, Russia has been talked about having drought, but their estimates keep coming in with higher production forecast there to 83 million metric ton. And I saw this morning too, something about China still having a record crop, even though they had drought concerns as well.
Yeah, that certainly doesn't help. So let's talk about the reports. Acreage is the big one, obviously, that we watch. And it doesn't look like the average trade guesses are that far from the 93.5 million acres of corn and 83.5 million acres of beans that we had in the intentions. Could we get a big surprise there? That seems a little hard to believe.
Oh, I think we will get some sort of big surprise. This is a big report. Usually acres move like 1.4, 1.3 million for corn, and that's usually higher, sadly. And for soybeans, it's usually the 1.5 million lower. So to see the trade estimates right with March, it's probably not going to happen. But I got to admit, I can't really argue with the guys putting out those estimates because I don't know which way I'd have it. I have corn and soybean acres both up, but just slightly, just because I thought we were a little bit too low on total principal crop acres. But it was an interesting spring. We had prevent plant areas we normally don't, southern Illinois, southern Indiana, and then but then to counteract that, North Dakota, South Dakota have got like everything planted. I think they have water issues now, so acres could be higher, and that would be a little depressing on this market as well.
Yeah. Quarterly stocks, the big one we're going to be watching is corn. Looks like we would be 350 million bushels below last year with the numbers that we're currently looking at for trade guesses. But could we get a surprise just because of what you and I talked about, which is July's been pounded and you've got those old crop, new crop spreads that have been unwound?
I know. That's the report I'm going to be looking at close quarterly stocks for corn. So the trade estimates are dead on what USDA has been suggesting. We have a smaller crop from last year. Demand is good. We're basically down 300 million bushels. That's not at all how the July contract traded. Right now our stocks use ratio is just below 9%. Michelle, we've been above $5 easily, and then some when our stocks use ratio is that tight. Instead, we're down here flirting with $4, and it looks like it's never going to find a low. So I'm looking forward to that report. Maybe still the problem is last year's yield, and that should show up in the quarterly stocks report, but I don't know. It'll be interesting to see if we're even with the trade estimates, say those average estimates are dead on. To me, this old crop corn situation should rally. But I don't know. I'm starting to hear a few things, Michelle, like basis. I heard somebody last night paid 90 cents over the board to get corn. And that's what you should hear if we're in a stocks use ratio that tight and the board down this low.
I was going to say, when you're at 1.365 billion bushels, which is 9% stocks to use ratio, we should be over 5, right?
Absolutely. And I'm a fundamental trader. So that's the way I would think. And that's why I've got old crop corn and haven't suggested guys to sell old crop corn. And now we're down at lows. So I understand the frustration. But Michelle, this is probably the first time in the last 25 years I feel like we are ignoring the USDA numbers. Now, I'll be the first to say you have to watch the trade action because the trade is always right. But we're going to find out here soon whether the trade's right and we have more corn, or if we keep having these quarterly stocks come in this low. It says that there's not corn out there. I think a lot of corn moved off farmers' hands this winter, Michelle. And I think over the next month, there isn't a lot of farmers selling. So we could go from this depressed price today to a very nice rally in just a month.
All right. I hope you're right about that. I really do.
Me too.
Cattle market, we have seen the cash market top, it looks like. The futures, though, even though they've topped, they're at a big discount. And so does that kind of hold the futures market together here?
I think it does at times. But yeah, to back up, I do think that cash market did top. And like you and I talked with the seasonals, that happens when they're buying for after the 4th of July. And that's what Packers are doing now. What I don't like is this market seemed to the top on bullish news. We had slaughter very low. We had cutouts very high. And it just seems like we ran out of steam. But to answer your question, we still have this huge discount futures to cash. So at any point in time, this market could rally $3 or $4 and still be at a discount to cash and make everyone think, oh, see, the highs aren't in. But just the way the trade acts, I feel like we made a high and we're going to start to make a downward trend. I think those $3 or $4 rallies to get closer to the cash, I think are selling opportunities for producers.
Okay. What about the hog market? We've had a good run with funds pushing it, but also cash and cutout values have been higher as well. Do we keep going here, do you think? And do we get any squaring ahead of this hogs and pigs report?
I think you are seeing this squaring because I think no one really believes that the herd size is as large as what USDA had in the last hog and pig report. So whether they make that correction or not, the trade action says the supply is not there. It looks very strong. I know we've had some resistance here and moved a little bit sideways in the charts, but I think we can push through that. Cutouts are climbing, and that's maybe a little bit of reason why I'm a little bearish the cattle market as well. It feels like maybe the average consumer is switching a little bit to a cheaper protein source in pork. And so therefore the demand there is increasing and maybe going away from beef just a little bit.
And speaking of demand, 51,400 metric tons on the weekly pork export sales. So those were good as well, weren't they?
They were phenomenal. And I've been one kind of thinking that pork exports were actually going to be down because China does not need our pork right now. But it's Mexico was the #1 buyer in there, and always great to see.
Okay. Well, we'll see if that holds us together. Plus, like you say, these disease issues have certainly had an impact on numbers there. We'll watch that. All right. Dwayne Bussey with Bolt Marketing, and that is Markets Now.